Have you ever heard somebody say, I don't pay taxes because I've got an offshore company? Or maybe you saw a flashy YouTube video promising that if you sell your cryptocurrency through some island shell company, Uncle Sam will never know. Well, here's the reality. For U.S. citizens, these shortcuts are the fast pass lane to the Gray Bar Hotel, where you get 3 meals a day and free accommodations courtesy of the Federal Bureau of Prisons. But does that mean offshore banking, offshore companies, and offshore trusts have no tax benefits at all? Well, not exactly. The truth is nuanced, and if you're a high net worth individual, understanding it could save you from devastating mistakes and maybe even save your freedom. So stick with me, because in this video, I'm going to pull back the curtain on offshore tax myths versus realities, tell you where the legitimate benefits actually exist, and explain why the real power of offshore planning isn't about dodging taxes at all. Hi, I'm the business guy, the CEO of the Lawyers Limited Law Firm and Asset Protection Planners. My team has set up more Cook Islands trusts than any firm in the world, and I've been doing this for 34 years, nearly 30 of those focused on Cook Islands Trust. So I've seen the good, bad, and the very ugly when it comes to offshore planning. And before we go deeper, if you want straight talk on protecting your money, subscribe to this channel. We post weekly videos that could literally save you millions, so don't miss the next one. Let's start with the biggest myth. If I move my money offshore, I don't have to pay U.S. taxes. Well, that's flat out false. The IRS has 3 simple letters for you, CFC, Controlled Foreign Corporation Rules. These say if you're a U.S. person and you own more than 50% of a foreign company, guess what? You still have to report its income on your U.S. tax returns. So you can't just set up Kevin's Crypto Company Limited in the Cayman Islands, sell $10 million worth of Bitcoin through it, and think the IRS will shrug and say, well, it's offshore, so I guess we don't care. The IRS cares very much. In fact, they run entire task forces that specialize in offshore enforcement. In 2009, UBS, one of Switzerland's biggest banks at the time, paid $780 million to the U.S. government and handed over thousands of American names. That scandal triggered FATCA, the Foreign Account Tax Compliance Act, which requires every major foreign bank to report U.S. account holders. Now don't get the IRS transparency confused with asset protection. You don't protect your assets by hiding. You protect it with the proper legal tools, such as an offshore asset protection trust in the Cook Islands, Belize, or Nevis. And that said, if you're thinking you can just quietly open an account in Zurich and vanish off the IRS radar, well, let me save you the suspense. You can't. And if you try, the penalties aren't just financial, they can be criminal. So here's the cliffhanger. If offshore banking isn't really about hiding money from taxes, in spite of what we may see on the movies, false information, then why do many wealthy people still do it? And I'll answer that in just a moment. Okay, so if offshore banking won't erase your tax bill, why even bother? Simple. Privacy, diversification, and most importantly, protection from lawsuits. Now think about it. In the U.S., if somebody sues you and gets a judgment, banks are required to hand over your money. Offshore, a Cook Islands bank, for example, as long as it's in a Cook Islands trust, will politely tell that U.S. lawyer, sorry, we don't recognize your judgment here, try again. So that's why offshore trusts and LLCs are so powerful. My firm often sets up Cook Islands trusts with a Cook Islands LLC inside of it, and here's how it works. You're the manager of the LLC while everything is calm. You control the assets, the bank account, the investments. But when you get sued, our licensed bonded trustee company law firm in the Cook Islands steps in to protect you. The plaintiff's U.S. judgment doesn't apply there. So it's like installing a vault door between your money and your adversaries. Okay, now back to taxes. Now, offshore accounts don't give you a magic tax holiday, but here's what they can legitimately offer. Number one, not deferral, but current tax rules. So forget the old idea of set up a foreign company, park the profits and defer U.S. taxes until you bring the money home. That ship sailed years ago. Today, if you control a foreign corporation, U.S. tax law usually forces you to include the income now under regimes like Subpart F and GILTI. In summary, Subpart F is passive income that your foreign corporation makes, and GILTI, or GILTI, is global intangible low-taxed income, so that international companies pay some U.S. taxes. In other words, the IRS doesn't wait for you to repatriate profits, they tax you currently. There are a few narrow technical exceptions, like the GILTI high tax exclusion, but those aren't really deferrals, they're exclusions in very specific circumstances. I mean, don't you like that acronym, GILTI? Now, for most Americans, offshore structures mean you still file annually and pay U.S. taxes as you go. Number 2, portfolio diversification. What offshore accounts do is offer global access. Now, you may be able to hold currencies, foreign mutual funds, or private investments that you can't easily touch inside the U.S. Now, that doesn't eliminate taxes, but it can enhance your investment options and sometimes improve returns or reduce risk through geographic diversification. Number 3, asset protection. This is what I'm excited about, combined with tax compliance. Now, this is a big one. A properly structured Cook Islands Trust with a Cook Islands LLC doesn't erase your U.S. tax bill. You still report your income, but it does something the IRS can't help you with. It shields your wealth from lawsuits. And in my 34 years of experience, that threat is often far greater than taxes. So by combining offshore structures with full compliance, you gain security and peace of mind while staying on the right side of the law. So here's the key distinction. Offshore structures are about protection first and tax strategy second, if at all. Let me share a story. A client once came to me after he watched a guru online promising that he could sell his crypto tax-free with a Belize company. The guy actually says, "You don't owe the IRS a dime." The client sold millions in crypto, didn't report it, and then got a notice from the IRS. Suddenly, he wasn't Googling offshore benefits, he was Googling best criminal defense attorney. So he ended up paying massive fines and legal fees, money he could have kept if he had done it right. So let me be crystal clear. If you're a U.S. person, your worldwide income is taxable. It doesn't matter if you earned it in Miami or Monaco or Mars, for that matter. If you've got a blue passport, Uncle Sam wants his share. And if you fail to report foreign accounts or companies, the penalties are brutal. The FBAR, or foreign bank account report, alone can trigger a penalty of $10,000 per year per account. And if they think you willfully hid it, the penalty jumps up to 50% of the account balance per year. And so that's why those YouTube videos promising tax-free crypto sales offshore are not just misleading, they are baited traps for the uninformed. Now, the cliffhanger here, are there any legitimate offshore tax benefits left for Americans, or is it all just smoke and mirrors? So let's break that down next. All right, here's where we get honest for U.S. persons. The offshore tax benefits are slim, but they do exist, mostly in narrow technical areas. Number 1, Puerto Rico Act 60, formerly Puerto Rico Act 20 and 22. Now it's Act 60. Okay, this isn't technically offshore since Puerto Rico is a U.S. territory, but it's about as close for Americans as you can get to a legal tax haven. So if you move there and qualify as a bona fide resident, Act 60 gives you 2 massive breaks. First of all, 0% tax on capital gains. You realize after establishing residency. So stock, crypto, real estate, if the gain is sourced after your move. Now, Puerto Rico doesn't tax it, and the IRS respects that exemption. 4% corporate tax rate on eligible Puerto Rico-sourced business income if you set it up under the export services rule. On top of that, dividends paid from that Puerto Rico company are paid to you as a resident completely tax-free. And here's the personal income tax piece. As a Puerto Rico resident with an Act 60 decree, certain Puerto Rico-sourced dividends and interest are 0%, while ordinary Puerto Rico wages are taxed under Puerto Rico's own tax brackets, which usually top out at about 33%, unless they fall under the Act 60 initiative, where it's just 4% as you pay yourself out of your corporation. And that's huge. But, and this is critical, you can't just rent a P.O. box or vacation a few weeks a year. You have to genuinely relocate and meet the residency test and truly commit your life to Puerto Rico. So done right, it's completely legal. Done halfway, it's an IRS disaster waiting to happen. In fact, I did a video. You can look at my videos for the Puerto Rico tax-free income. It's a whole video just on this particular topic. Okay, next up, the Foreign Earned Income Exclusion, or FEIE. If you live abroad for most of the year, you can exclude up to about $130,000 of earned income. But this is only on wages or self-employment income, not passive investments, okay? Number 3, no more deferral with foreign corporations. Now, in the past, U.S. taxpayers could set up an offshore company, run an active business through it, and defer U.S. taxes until they brought the money home. That loophole is gone. And today, if you control a foreign corporation, U.S. law generally forces you to include the income every year through rules like Subpart F and GILTI. Now, there are narrow exceptions, such as the GILTI high tax exclusion, but these aren't true deferrals. They're just technical adjustments. So for most Americans, the IRS doesn't wait until you repatriate profits. They tax you now. I mean, somebody has to pay for the radar. Okay, treaty benefits. The U.S. has tax treaties with many countries that prevent double taxation. Let's say if you pay taxes in, say, Germany, you can get a credit against your U.S. taxes. But again, it isn't tax-free, that's just coordinated. So notice something, these are not magic tricks. They require compliance, proper reporting, and usually a lifestyle change. So if somebody is selling you an idea that you can live in California and run your business through a Cayman shell and pay 0 U.S. tax, run the other way, you'll end up in big, big trouble. So here's the paradox. While the offshore tax benefits are limited, the offshore asset protection benefits are enormous. Remember, lawsuits are everywhere in the U.S. Studies show over 40 million lawsuits are filed in America every year. That's 1 lawsuit for every 8 adults. Taxes only take a percentage of your income this year. However, lawsuits can take everything that you've worked for your entire lifetime. So that's why what keeps billionaires sleeping at night isn't usually tax evasion, it's lawsuit proofing their wealth. So that's why I focus on Cook Islands trusts, because they're the gold standard for offshore protection. We've set up more of them than any firm in the world. In fact, I've personally been structuring them for 30 years. And here's the genius part. When the waters are calm, you're in control of the LLC inside of the trust. But when a storm comes, meaning a lawsuit, our Cook Islands trustee company law firm steps in outside the U.S. jurisdiction and shields your assets. So that's why wealthy individuals often don't mind paying their taxes. They're more worried about losing everything to litigation, and the right offshore structure prevents that. So when people ask me, business guy, can I save money offshore on taxes? I tell them, if you want asset protection, security, and peace of mind, yes, there are benefits to going offshore. But if you want a get out of taxes free card, you're asking the wrong question. So let's wrap this up. Offshore planning isn't about hiding from the IRS. That's the road to an orange jumpsuit. So the real benefits are global diversification, enhanced privacy, and most importantly, protection from lawsuit-happy environments of the U.S. Taxes? Sure, there are some niche benefits, but for most high net worth Americans, offshore planning is about keeping what you've already earned safe. If you found value in this, don't just click away, hit subscribe right now, because the next video might answer the exact question you'll have when your assets are on the line. And if you're ready to explore how an offshore trust can protect you, go ahead and head on over to assetprotectionplanners.com. That's my firm, the Lawyers Limited Law Firm. We'll walk you through your options step by step. Remember, the real loophole isn't avoiding taxes. It's avoiding lawsuits, and that's the secret the wealthy already know. I'm the business guy. Thanks for watching, and I'll see you in the next video.